Let's talk about the US dollar, the Beyoncé of money, the superstar that always seems to steal the spotlight. For decades, the dollar has been the main act on the global stage, dazzling audiences everywhere with its strength and reliability. It's the currency that other currencies look up to, the one that sets the trends and makes the rules. When people think of money, they think of the dollar, shiny, powerful, and seemingly unstoppable. In fact, you could call it the Meryl Streep of international finance. Always nominated, always winning, and always in demand. The dollar has a reputation for excellence, and it's been collecting awards for decades. Whether it's in movies or money, being the best means everyone wants a piece of you. For generations, the US dollar has been the world's go-to currency. It's the glue that holds global business together, making it easier for American companies to borrow money, invest overseas, and trade with partners around the world. When deals are made in Tokyo, London, or Dubai, chances are the dollar is involved. It's the currency that keeps the wheels of international commerce turning smoothly. This special reserve currency status means that most countries keep massive piles of dollars in their central banks. These reserves act like a financial safety net, giving countries confidence and stability. The constant demand for dollars keeps it strong and widely accepted, making it the backbone of the global financial system. That's why you can use a $20 bill almost anywhere in the world, from street markets in Asia to luxury hotels in Europe. The dollar is the passport that gets you in the door, the trusted friend that everyone recognizes. It's been the bedrock of global trade, the currency that oil, gold, and even coffee are priced in. For decades, the world has run on dollars. But now, in 2025, the dollar's losing its edge. Its value is slipping, and this time, it's not just a temporary dip. The world is watching as the dollar stumbles, and the consequences are starting to ripple through the global economy. People are asking, is the dollar's reign coming to an end? Economists and politicians are sounding the alarm because this isn't just a number on a screen. When the dollar weakens, it affects everything from the profits of giant corporations to the price of groceries at your local store. A falling dollar means imports get more expensive, inflation creeps higher, and everyday people feel the pinch in their wallets. So, what's going on behind the scenes? It's a complicated mix of factors. The Federal Reserve's decisions on interest rates, a slowing US economy, and uncertainty about the future are all playing a part. When the Fed changes course, the whole world feels it. And right now, the signals aren't looking good. On top of that, other countries are starting to ditch the dollar. They're trading in their own currencies, building new alliances, and looking for alternatives. The world is slowly moving away from its dollar addiction, and that's making things even more complicated for America. And let's not forget about America's national debt, which is spiraling out of control. The government keeps borrowing more and more, and investors are starting to worry. A mountain of debt makes the dollar look less attractive, and that's putting even more pressure on its value. The dollar's in trouble, and the world is watching closely. In the next chapters, we'll break down exactly why this is happening, what it means for you, and what the future might hold. Buckle up. This is one financial roller coaster you won't want to miss. The Federal Reserve, America's financial DJ, controls the party with interest rates. Lately, they've slashed rates to near zero to boost the economy, but that's made US investments less attractive. International investors want the best returns, and with US rates so low, they're taking their money elsewhere. As they sell dollars to buy other currencies, the dollar's value drops. The Fed hoped to jumpstart the economy, but instead, they've made the dollar less appealing. It's a classic case of solving one problem and creating another. Now the Fed's stuck, help the economy or protect the dollar. Either way, the dollar's feeling the pain, and the world is watching. The US economy is limping. Job growth has slowed, and people are spending less. When Americans tighten their belts, businesses suffer, leading to even fewer jobs in a vicious cycle. Consumer spending is the engine of the US economy, and right now, it's sputtering. International investors see this slowdown and get nervous about holding dollars. Would you invest in a company that's laying off workers and losing sales? Neither would they. As confidence drops, so does the dollar's value. The economic hangover is real, and it's dragging the dollar down with it. The world is starting to look elsewhere for stability, and that's bad news for America's financial reputation. For decades, the US dollar was the undisputed king of global trade and finance. It was the currency that everyone trusted, the one that countries around the world relied on for international transactions, reserves, and investments. Whether you were buying oil, trading goods, or investing across borders, the dollar was the default choice. Its dominance shaped the global economy, giving the United States significant influence over international markets and even the policies of other nations. But now, a major shift is underway. Countries like China and Russia are actively moving away from the dollar, choosing instead to conduct trade in their own currencies. This isn't just about economics, it's also about politics and power. By trading in yuan or rubles, these nations are reducing their exposure to US sanctions and influence, and asserting more control over their own financial destinies. We're seeing more and more deals, especially for energy and raw materials, being settled in currencies other than the dollar. This process, known as de-dollarization, is picking up speed. It's not just rivals of the US making this move, even some of America's closest allies are starting to diversify their reserves. Central banks in Europe, Asia, and the Middle East are quietly increasing their holdings of euros, yuan, and gold, while reducing their reliance on the dollar. The goal? To protect themselves from potential shocks and to gain more flexibility in a rapidly changing world. The dollar's dominance isn't vanishing overnight, but it is being chipped away, block by block. Each time a country chooses to settle a trade in another currency, or shifts a portion of its reserves, it's like removing a piece from a giant Jenga tower that's been standing for decades. Imagine that Jenga tower, each nation pulling out a piece makes the whole structure a little less stable. The more pieces that are removed, the shakier the tower becomes. It's a slow, methodical process, but the impact is real and growing. What we're witnessing is the rise of a multipolar currency system. Instead of one currency ruling them all, we're moving toward a world where the dollar shares the stage with the euro, the yuan, and other major currencies. Global leaders are meeting to discuss new ways to settle trade, create payment systems, and build financial networks that don't depend solely on the dollar. This isn't a sudden collapse, it's a gradual, steady trend that's been building for years. If you look at the data, you'll see the dollar's share of global reserves and international payments slowly declining year after year. The world is adapting, and the financial landscape is evolving right before our eyes. The US dollar is no longer the only star of the global financial show. Its spotlight is dimming as other currencies step forward, ready to play a bigger role on the world stage. The euro, the yuan, the ruble, and even regional currencies are now stepping into the spotlight, each bringing their own strengths and influence to the global economy. America's monopoly over the world's money is fading. The era of dollar supremacy is giving way to a new, more complex financial order, one where power is shared and the rules are being rewritten. Trust is everything in global finance, and lately the US government looks anything but reliable. Political chaos, government shutdown threats, and wild policy swings have shaken investor confidence. Investors crave stability, not drama. And America's been serving up plenty of drama. Fights over the debt ceiling and unpredictable trade policies make the dollar look risky. When trust erodes, investors and countries start looking for safer options. The more unpredictable US policy becomes, the faster others run for the exits. This self-inflicted mess is weakening the dollar even more. The world wants a steady ship, not a political roller coaster. And right now, the US looks like it's lost the map. Let's talk about the US national debt, now over $35 trillion. For years, everyone wanted US Treasury bonds, but as debt balloons, investors get nervous. A massive IOU makes the US look financially reckless. If investors lose faith, they'll demand higher interest or stop buying US debt altogether. That could force the government to slash spending, raise taxes, or print money, risking hyperinflation. Every new trillion added to the debt pile is another reason for the world to look elsewhere. The debt is a ticking time bomb under the dollar's value. Politicians have kicked the can for years, but the road is running out. The world is watching and judging. A weaker dollar hits you where it hurts, your wallet. Imported goods get pricier: phones, cars, coffee, you name it. If the dollar buys less abroad, everything from electronics to groceries costs more at home. This is imported inflation, and it raises the cost of living for everyone. American exporters benefit, but for most people, it's just more expensive stuff. Global trade gets messier too, as countries scramble to avoid dollar instability. The government's borrowing costs rise, leaving less money for things like schools and roads. A falling dollar isn't just an economic headline, it's a daily reality. and it's making life harder for millions of Americans. The pinch is real, and it's not going away soon. Ask economists about the dollar's future and you'll get two camps. The slow decline crowd says the dollar will fade gradually, sharing power with other currencies. They argue there's no clear replacement and US financial markets are still unmatched. The doom loop camp warns that confidence could collapse fast, triggering a rapid dollar exodus. They see a perfect storm of low rates, debt, and global rivals. The truth is probably somewhere in between. But the fact that this debate is raging shows just how shaky things have become. The world is bracing for change. Are we doomed? It's a question that's on the minds of millions of Americans right now. With headlines warning of economic uncertainty and families across the country feeling the pinch of rising prices, it's easy to feel anxious about what comes next. The world seems to be changing faster than ever, and the future of the US dollar, a symbol of American strength for generations, suddenly feels uncertain. But are we truly on the brink of disaster? Probably not. The dollar's golden age, when it reigned supreme as the world's undisputed reserve currency, may be ending. But that doesn't mean collapse is inevitable. Instead, we're entering a new era, one where the dollar's dominance is being challenged, and its role in the global economy is shifting. The value of the dollar is under pressure from many directions. Low interest rates have made it less attractive to investors. A sluggish economy and persistent inflation have eroded confidence. Meanwhile, global rivals are working hard to build alternatives, and political chaos at home has made the world nervous about America's stability. Add to that a mountain of government debt, and it's clear the dollar faces real headwinds. For decades, being the world's reserve currency brought huge benefits: cheaper borrowing, global influence, and economic security. But now, those perks are fading. The costs, like higher interest rates, more volatile markets, and growing competition, are starting to pile up. Everyday Americans are feeling the impact. Imported goods are getting more expensive, making it harder for families to stretch their budgets. The government finds it riskier and more costly to borrow money. And global trade, once smooth and predictable, is now more chaotic and uncertain than ever. Still, the dollar won't collapse overnight. It remains a pillar of the global financial system, but it's no longer untouchable. Other currencies like the euro, the yuan, and even digital assets are rising to challenge its supremacy. America must now adapt to a world where the dollar is just one of several major players. This means forging new alliances, strengthening our economy, and rethinking our place in the global order. To succeed, we'll have to make tough choices about government spending, tackle our growing debt, and decide how we want to lead on the world stage. These decisions won't be easy, but they're essential for securing our future. The decline of the dollar's dominance isn't just a crisis, it's a wake-up call. It's a chance to rethink our priorities, invest in innovation, and build a more resilient economy for the next generation. What we do next will shape America's future for decades to come. The choices we make today will determine whether we rise to meet these challenges or let them define us.